Welcome to the Global Investor Podcast, a show that focuses on helping foreign investors enter the lucrative U.S. real estate market. Host Charles Carillo combines decades of real estate investing experience with a professional background in international banking to interview experts in all areas of U.S. real estate investing. Now, here's your host, Charles Carillo.
Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Anthony Metzger. Anthony is an up-and-comer in the real estate syndication space. He closed on his first complex alongside a private equity firm in 2019. It was a 218-unit complex. He has since then house-hacked a fourplex while continuing to underwrite potential deals for syndication. So thank you so much for being on the show.
Charles, it's a pleasure to be on the show, and thank you for having me.
Yeah, sure. I always like to talk to investors and especially investors that closed over 200 units on their first deal. So give us a little background on yourself, both personally and professionally, before getting involved in real estate investing.
Sure. So I'm from Minnesota, and right out of high school, I got involved in the wine industry. So I went over to Europe right after high school at the age of, I think I was 18, turning 19. Became a sommelier. Then I shifted into wine making, traveled to different countries to make wine. And so really my 20s, I went to Napa Valley College out in California for 3 years. So really my 20s was in the wine industry, and coming home from the wine industry, all my travels, it was a great time, traveled a lot, met a lot of great people, did a lot of cool things. But then all of a sudden after so much of that, I was ready to kind of move on to something that's more entrepreneurial, because I've always wanted, I've always had that drive in me to be an entrepreneur, and I've always really wanted to be really rich. So I didn't see a pathway forward in the wine industry. I know there's a lot of rich people in the wine industry, but for me at the time, nothing was clicking. So what I did is I started listening to a podcast, real estate investing podcast, specifically regarding syndications. And that's how I initially got started and interested in real estate.
Nice. Yeah, the wine industry is a great place to find investors, I imagine, right?
Right. Yeah, no, it's nice because like when I come across a potential investor nowadays, hey, you want to go grab a glass of wine and and talk about real estate investing. So
nice. Yeah.
Right.
It's great. Yeah, every time out in Napa and Sonoma, it's just like a lot of dumb money around those industries. So that's awesome.
Yeah, so, people love spending the money on the wine. So that's good.
So other than being rich, and was there anything else that why you chose real estate as your investment vehicle? I mean, freedom, obviously being wealthy, these are all things that come from, but was there anything else that's kind of like what your why is?
Once I started looking into real estate and studying it, it's one of those industries that, for me, I'm like a C student. I never really did great in school. I wasn't an A student and didn't go to the big universities. But looking at real estate, it's an industry for me that's simple, not easy, but simple to understand and wrap my head around. And I knew while looking at it that if I put in the work, if I put in the grind, I put in the time, that there is a pathway, a proven pathway to success in this industry. So it really clicked with me in that sense, where I was able to wrap my head around it. Hey, you buy this building, you collect rents, it cash flows. And then obviously it gets a little more complex when you start talking about syndications, but there's just so much great information and content out there, like your podcast, where you can listen to it and get such great information from people that have done it. So you're learning from real teachers when listening to podcasts like yours, that I was able to get all of this information, and it clicked with me, unlike, school, where it definitely didn't. So that's really why I went towards this industry, because it was something I could wrap my head around, understand, and I knew if I put in the time and the grind, I could find success. So.
Yeah, it's definitely an industry. It's not brain surgery. I mean, if you talk to anyone, no one ever is like, how do you make money renting real estate? You know what I mean? Like, everybody has rented an apartment before, and they understand, okay. They don't understand probably the spread on the back end to the landlord. But the thing though is that, or, the due diligence as it goes with it, or everything else, but they understand that, how money comes in and where money goes, which is a lot easier compared to a lot of different asset classes out there that, that people might not be as aware of how you actually are able to monetize it. So that's awesome. So
Right.
let's talk about your first deal, 218 units. That's huge. How did you find this deal?
So I found it by signing up on these different brokerage firms' mailing lists, which I'm pretty sure just about anyone can do. I'm talking about the big ones like Marcus and Millichap, Newmark. You can go to these guys' website, sign up for their to join their mailing list, and then they just start email blasting deals out daily. I mean, I can look at my inbox. I probably got 10 today. So I signed up for that list, and then as deals started coming into my inbox, I would start analyzing them. And at first, just getting started into this underwriting business, I didn't really know what it was I was looking for. I knew exactly what I needed to find, but when a deal came across my desk, I would analyze it. And there was a benefit to that, and that was to learn how to underwrite and sharpen my pencil. But nowadays I can look at a deal, and just by looking at the photos and some of the basic information, I can tell whether it's worth diving into or not. But going back to my deal, yes, after just looking through all these different types of deals, this portfolio came across my inbox, and it was a 2-property portfolio of about, I'll say, 350 units. And what I did is I dissected that portfolio. So I looked at each property separately. And when I did that, I realized one of the properties does not make any financial sense for us and for our investors, doesn't meet our returns or requirements. The other one did. So what I did at that point is I reached out to the broker and started talking to them, tried to get a ballpark price of what it is they were looking for. And once I knew I was in the ballpark, that's when I really decided to dive in deeper, meaning reaching out to different property management companies, doing a price per square foot analysis on my own by finding comps on apartments.com. So I really started diving into it. Once I felt very confident, maybe I'm getting a little bit ahead of myself, but that's how I found the deal. Just signing up for these brokers lists, and then just going through analyzing all these deals. And then I found this one in a portfolio.
So really anybody can sign up for these lists, as you mentioned, and I'm on a ton of them as well. I have a separate email address we have at our company where we get all this in, and it just never ends.
Right.
I think I got 3 before I got on this call, which is great because anybody listening here can sign up for them right now.
Right.
And within 24 hours, your email box too can be filled with deals with thousands of other people. But how did you get the broker to take you seriously, which is really, I mean, let's be honest, that's what it is everywhere. These people are working on commission. And if we were in their position, the same thing is we want to vet our buyers, make sure that they're not, full of hot air, let's just say, for the show. What did you do? How do you tell someone that you're real, you're going to close? And I imagine this is like a $10-15 million deal. I mean, that's a lot of money for a new investor. I mean, what did you do to get them to take you seriously?
Right. Yeah. So this deal was just over 11 million. And actually, so we've closed on it. It's been almost a couple of years now. And if you go to my website, financialbedrock.com, you can download the sample deal package on that deal that we closed on. I turned it into a sample deal package now that it's not an active deal. So anyone can go and look at it and see how we underwrite. But the way I got the broker to take me serious on this one, because like you said, I have zero credibility. I mean, I don't have any
No offense, sorry.
Yeah, no, I had 0 deals before this. I didn't even own a house. I was living in an apartment. So the way I had them take me serious was before getting on that phone call. So mind you, it was a year and a half of analyzing and looking for deals till I found this one. And during that time period, I signed up for a course that educated me on how to underwrite deals and look for deals and analyze deals. And in that course, they teach you essentially the language of real estate. So I speak 2 languages fluently, French and English. And real estate investing is almost like its own language. So what I did is I learned that language. So when I get on the phone with these brokers, I can speak their language. And when you can get right on a phone call and right away start diving into the deal, asking real questions, that shows that you're professional, you know what you're looking for, you know what you're talking about. And they tend to just start getting into the conversation. And in this case, it just right away, we just got into the conversation. It wasn't, well, who are you? What's going on here? It was like, immediately getting into the conversation, asking the right questions, speaking the language. Then he starts replying and talking. And once we get past that initial conversation, the first quick introduction, at that point, we're talking about the deal. We're talking about the price. And it was as simple as that, getting educated, learning the language, so that when I get on the phone with these professionals, I can have that conversation.
Nice. Yeah, it's awesome. So you were educated in your vocab, you knew you're talking about, you had underwritten the deal, you're talking about debt, all the different terms that we use in the commercial and the commercial multifamily space. That's awesome. So the thing though is that there's really three parts of us. You have to find the deal, right? You have to find the money, and then you have to do the asset management, because really most people aren't going to be doing the management themselves when they're starting out. So they're going to have a property management company. They're going to be asset management. So you partnered with a private equity firm. How did you meet them? How did you meet this firm that was probably going to take care of a lot of the money raise and a lot of the asset management, I imagine?
Right. So I was listening to a podcast one day, and the person hosting the podcast was actually the founder of this private equity group. And they said loud and clear, hey, if you find a deal that meets our criteria, we'll partner with you on it. Find it, bring it to us, and we'll partner with you on it. And so I dove a little deeper into what he said there, went to their website, found that they were selling a program. That's the program I was mentioning that I got educated with. Bought their program, got educated specifically on what it is they're looking for. And once I felt confident, immediately I started going out and trying to find a deal for them. And so that's how I found them, just by listening to podcasts. So I'll tell you too, I was hosted on a podcast previously, probably a few months ago, and somebody heard me on that, was listening to the podcast, and contacted me from me being on that podcast. And they called me, we started talking, and they said, I've got this deal that's in the market that your deal is, and I brought it to this group, and they didn't want to do it. And I said, well, send it over to me. Well, sure enough, he sent it over to me. We just made a full ask. We just sent it in an LOI to the seller, full asking price. So it's similar to that. It's I listened to a podcast, found somebody looking for a deal, found the deal, brought it to them, and then they decided to partner with me on it. So that's really how it worked out, just by listening to podcasts and networking, essentially.
How did you vet them?
He had a ton of content out there, did some research on through his podcast, through social media, went to the website, found that, there's a lot of credibility. You really do get to know people by listening to their podcast, by following their social media. I mean, also, I didn't have much to lose. I mean, I'm looking for a deal. It's not like I'm taking money and I'm giving it to somebody that I heard one time. So without creating a relationship. So I felt confident in them. I looked at my option, where I was at. I didn't have a whole lot to lose. Then I also started reaching out to them. I sent them an email, said, hey, the little introduction, just want to let you know, put myself on your radar that I am out looking for deals to bring to you. So they, little introductions like that. Then he hosted a live event actually out in DC, which I attended. So that was also another way for me to get face to face with them, shake his hand, talk to him, tell him about myself. So, there's ways you can, So to answer your question, that's kind of how I vetted them. Yep.
So you got educated and you did a ton of networking, and that's how this whole industry works,
right?
Because it's amazing how much relationships kind of matter when you're getting into these type of properties and these type of deals. So you mentioned before, I think when we were talking before, I read about it was you did some due diligence on the deal before, because just a side point here, people will reach out to our firm and they'll send us deals and they won't be underwritten. And we're just like, well, I'm like, that's not, I'm not going to underwrite your deal so that you know what I mean? So I'm just like, hey, that gets nixed. But the thing though, is that how much underwriting Like, because that's going to show you how professional you are. If
Right.
you want me to review underwriting or someone on my firm to review underwriting, that's one thing. It's a different thing if like you just send me, hey, underwrite this, and I think we can get rents 20% higher.
Yeah, right.
So what did you do? What was your preparation for that underwriting and due diligence prior to sending it over?
Right. No, I did a lot. I mean, they ask that you do a lot, just like yourself. You don't want somebody just forwarding you an email essentially and saying, like you said, oh, we could this is a possibility. Well, did you dive into it at all? And the other thing is like bringing a deal to a sponsor like yourself or this group I was working with. You don't want to waste people's time. Time is very valuable, especially for people that are in the real estate industry that value, that's one of the reasons why we get into this industry is because it allows us to, freedom of time once we achieve a certain threshold of investing. But so you don't want to waste anyone's time. So what I did, and they told me this, did a ton of due diligence ahead of time. So got the deal in my inbox. Then I underwrote it in our very complex Excel calculator. Then I talked to the broker, got some price guidance. Then I did, I went to apartments.com. I did my own rent comp analysis. I looked at the financials. So one of the thing I did too is I reached out to 3 different property management companies.
Oh, nice.
That I didn't have any previous relationship with, but reached out to them, tried to get a pro forma. Got a pro forma from 2 of them.
Oh.
So I used that pro forma, put it into my model, looked at it compared to what they've got. So I did a lot of due diligence. Essentially, I put the golf ball on the tee, is the way I like to say, because I even negotiated pricing. I got the pricing down to a ballpark of within a few $100,000. And I knew at that point, all right, I've got a ton of due diligence done. I've done a lot of analysis on this deal. We're within a couple $100,000. And when you're talking, 10 plus, 11 plus $1 million deals, that's within the ballpark. So at that point is when I felt comfortable reaching out to this group and say, hey, I've got a deal. So I submitted my deal to them at that point. But yeah, like you said, definitely a ton of due diligence and analyzing before bringing a deal to a sponsor.
Yeah, and the other thing too is verifying. I imagine you didn't take all of their pro forma from the broker as as word, right, of what's truth. So it's you reached out to property managers. That's very important because we've passed on deals before because we're like, no, that management's not correct, and the broker come back, well, I found one guy that operates out of a trailer here that can manage. Well, I'm not giving, so it's like, I want to find and I want to talk to people and make sure that's the thing about once you're into a market, that market from doing research on it without even closing a deal. What market is for rents, for a 1980s product, for a 2010 product. What management is for that area. All this stuff, and that makes you very educated. So that's awesome. I imagine there was a bunch of mistakes, but give me a couple mistakes that you think you made during the process or you did make during the process, whether it's in this due diligence phase of it or whether it was when you guys were working with the firm, the private equity firm, you guys are actually closing it.
Yeah, regarding mistakes, it was a really clean process and we didn't miss anything in our due diligence. One thing, I don't know if you'll say it's a mistake. I can't think of a mistake off the top of my head regarding underwriting. But one thing to keep in mind when bringing a deal to a sponsor is it's great. I've benefited greatly from doing it. The thing is, a lot of times with sponsors, what will happen is they're out there willing to accept a deal from anybody who can find it, but they have their team in place. So you're bringing a deal to a team. They're going to go and do the next deal, and they're not necessarily going to include you in that deal. So you're not really a part of that team, which can be, like when I first got into it, bringing a deal, I was like, oh, great, I'm in with this great team, which I am on that deal, but not moving forward. So when you're doing that, like where I'm at today now, I have a team where we're actively looking for deals. We're doing deals, we're raising money, and we're growing together. And that's really important for the next step. If you are just going to find a deal to bring to a sponsor, that's going to be the really big key to scaling this business, is having a great team in place that you can do deals with moving forward. So not a mistake, but just something to keep in mind when thinking about bringing a deal to a sponsor. But yeah, as far as mistakes, we didn't make any during due diligence. We covered all our bases. So yeah.
Nice. Yeah, that's awesome. That's fantastic. That's a great point you've made, because I mean, we partner with other operators, and when we're doing deals, and obviously we have like they can do their own deals, we can do our own deals. We're not, talking to them, hey, we have this deal if we want to partner on it. But you'll get emails and you'll say, hey, we have a deal, it's already in underwriting, blah blah blah. Are you interested in partnering with us? A, B, and C is what we need, and hey, we're having a call this time, and you're on the team per se. I kind of like that as well, because then there's some deals I don't really want to do. I don't think they maybe have the experience. We have our investors' money and our money tied up in other deals, or whatever the situation is. There's tons of situation. But the thing is, that's a nice way. But just that you're involved, and obviously you bring a deal to them, they're definitely going to return your call. They're definitely putting you on their email list when you have deals coming out. So that's what all. I mean, you have a fantastic, and now you have great for your resume, but you also have a fantastic relationship out of it. So it's definitely a win-win, and that's great business for everybody that's involved.
Absolutely. That's one of the great things about this is, you don't have to get married with a partner for the next 30 years with your business. You can, each building's its own business in a way. So you can do one deal, and then, if things aren't working out as a partnership, well, hey, you're not stuck together for the next 30 years, and you're not, 50-50 on one company, on your overall company. Now you can go and do another deal with a different partner, or if you guys are getting along, hey, you guys can partner on the next deal. So there's a lot of great benefits to syndication.
So have you made any changes to your underwriting or property sourcing since purchasing the property?
I'm not sure if we change it. One thing we're doing now is we're trying to be even more conservative after COVID, with our underwriting and our reserves. COVID did hit us, especially the market that we're in. So we're just keeping that in the back of our minds now. Obviously we don't expect another pandemic to hit. Those don't hit every other year, but we are more conservative in our underwriting. We just don't know where things are going. So just more conservative on the reserves is really kind of where we're at with our underwriting, just being more conservative.
Nice. So what mistakes do you commonly see other real estate investors make?
Yeah. I would love to talk to some of these people that are buying properties at full price. I put a bid in at a property. I'm like, this is a great deal. This is a great offer. And then the next guy will come in and offer twice as much as I offered. So I love to talk. I'm thinking those are probably mistakes. So when that deal I was telling you about that we bought, it was part of a portfolio, right? And I looked at each one separately. I said, this one works, this one doesn't. Well, the other one did work, obviously, but at our price, but not at their asking. They found somebody that was willing to buy it at their asking. And I was like, how the hell are they able to do that? And well, guess what? I got the other day an email. Hey, this property is now for sale. Literally that one I couldn't believe it. I was like, wait a second, is that the one? So, I don't know what mistakes they made, but they clearly, in my opinion, they probably overpaid for it, just like a lot of people are probably doing right now.
Yeah.
But,
Well,
people aren't being conservative with their numbers. People are willing to pay full retail price. When we're in the private equity business, we got to create equity in these deals. And when you pay full price for them, it's hard to create. I get these deals, huge value add deal, but then they're asking more than the average sale price per unit in that market. So I'm like, that's not really a value add, because even when you raise the NOI, your exit is going to be at what you bought what you bought it for. So it doesn't really make sense. I don't know how people are doing this. It's going to be interesting to see how it goes.
Yeah, it's something I'm seeing too. And, I have people reach out to me in all different size properties, just asking because of the show and everything. And someone reached out to me and said they were paying $50,000 more, or they're pondering paying $50,000 over the appraisal on the property for this, I guess, like single or duplex rental. And I'm like, well, you're not going to get financing if the appraisals come in at this.
Right.
So you're going to put $50,000 up. And they want to get compensated for appreciation that's never even happened. It's the same thing when you have these brokers and they get the deal by saying, oh yeah, no, it's worth $110 a unit, but it's going to be worth 140 afterwards. So we'll just cut it right in the middle. And you're like, well, you're just adding on a premium for something that's never even happened, right? That you did know. So it's like, it's weird because we go into best and final, and we haven't bought stuff in a few months here. And it's something like, I mean, you're like, you're not going to win this. You know what I mean? Talking to brokers, and you go back and forth, and you're just like, how? And I look, I'm like, it's kind of, it's a little bit up there too, what we're offering. You know what I mean? It's not like we're getting a great, but then I look at it and I'm like, how is someone overpaying this? Because we can make it work. We'll get long-term debt, all this kind of stuff, really minimize your downside. But a lot of people going out there, I don't think they know, but I also don't think they've really spoken to their lenders. And that's probably what happens with a lot of these deals, where the broker circles back with you and says, hey, like, this is for sale. Well, what happened? Well, the price that they put, they didn't tell you that, but it's like they didn't get financing, right? Or they'd have to come in with not a 25% down payment. They'd have to come in with a 35% down payment or something, which kills any kind of return on that property. And it's interesting what's happening right now. That's for sure.
Right. Yeah, so, it's crazy. I had a deal sent to me the other day. It's a couple miles away from our current property, and I go, oh, this is interesting. This could work. And then I go, what are you guys hoping a door? And they said 70 a door. And I said, that's what we're planning on exiting at our current property in like 3-4 years, after we still do all this work to it. Plus the property you just sent me is at 40% vacancy. So I'm like, wow. What are you guys? I looked at it, I'm at 30 a door. So I'm like, next, obviously, but just the way it is out there. I don't know. I'm ready to buy 1,000 units today, but if they make sense, but just got to find that right deal.
Yeah, for sure. And they're out there. I mean, it just takes time. And there's also I think a misconception too, if people have gone through a lot of coaching programs, is there's only one way. And I feel that when you're researching highly successful, large private equity firms, you'll see that, they're buying all different types of real estate asset classes. So they'll be buying industrial, or they'll be buying single family. Obviously, it's easier to buy 100-unit complex versus 100 single family houses. But if there's no deal there, if there's no possibility of getting a return, they can't do that, right? So now they're editing their approach to fit the market and that portion of the market cycle. So that's another thing too, that we're always thinking outside the box, seeing how we can generate returns by going into, you're looking at stuff now, and especially when you're looking at properties now that are 40 years old, and you're like, well, I can build this for cheaper than this person selling it brand new. Right. And this is stuff too that's a whole different, a different thing from just acquiring multifamily, but it's different routes to getting to generating returns. But
yeah.
So what do you think are the main factors that have contributed to your success?
Looking back at that 18 months, so like I said, 18 months to find the deal, and I have a full-time job. This is after work, going home when all I want to really do is sit on the couch and watch TV. But I'm going home. I got rid of the TV. I put it in an office in my living room, and I just was analyzing deals. I didn't give up. That's the big thing. That's what I'm trying to get at. I got close to a couple deals during that 18 months, and then we lost them, which was tough. So, but I didn't quit. So not quitting, not giving up, just I really had faith and belief that if I put in the time and the grind, that I could find some success in this industry, because there's so much great content out there that just keeps telling me and that this is possible. Look, and they prove it. And I'm like, okay, I just got to keep doing it. So not giving up on it. And then that's really what led me to getting this deal. And again, I feel like I'm in that phase where I can't give up, because now that I have done that deal, I've house hacked this fourplex I'm in. And it has been a while since I found a good deal to syndicate, and it's starting, the trail's starting to go cold, but I'm not giving up. I just had a talk with a guy who owns a property down in Tallahassee, Florida today. He's interested in selling. He's going to get me the financials. We got that LOI out there submitted last week at a full asking price. Talked to the seller today or yesterday. Said they're not ready to sign it, but it's because they're looking for a property to 1031 into, so they want to make sure they're ready for that. But to follow up next week, so we're hopeful on that one. Yeah, so we're still hopeful on that. That's a 200 unit, 5 miles away from our current property. So, I'm still not giving up, even though we've had this long cold streak. So just don't give up, just keep going for it. And eventually you'll find something.
Yeah, I totally agree with that because we've had similar here. It's not been as many acquisitions as we typically do.
Right.
And it's just, but you got to stay and stick with what your returns are and make sure you're not getting into uncharted waters with what other people are buying or what other people think they're going to be buying at. So awesome. So how can our listeners learn more about you and your business, Anthony?
Yeah, appreciate that. So my website is financialbedrock.com. Actually just launched that, and I have, like I said, a free sample deal package for download on there right now. So you can go to the website, financialbedrock.com, download the free sample deal to see what it looks like, see what the returns look like on the deals we do. But also my email is anthony@financialbedrock.com. So feel free to shoot me an email. Like I said, somebody emailed me the other day and we got to talking, they had a deal and I just submitted an LOI with them on it. So you never know.
Nice.
But yeah, reach out to me. I'm glad to hop on the phone and talk.
Well, thanks, Anthony, for coming on. I will add those links into the show notes, and I want to thank you so much for coming on.
Charles, I really appreciate being on your show, and it's an honor. So thank you so much.
Thank you. Have a great rest of your day.
You as well.
Bye-bye.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at Schedule Charles.
Thank you for listening to the Global Investor Podcast. If you like the show, be sure to subscribe on iTunes or Google Play to get new weekly episodes. For more resources and to receive our newsletter, please visit globalinvestorpodcast.com. And don't forget to join us next week for another episode.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.